Hey, welcome to my YouTube channel. I'm John Fibonacci, and today I'm going to share with you the easiest trades that you'll ever take. So if you're a day trader or a swing trader in the Forex or futures markets, this video is for you. Let's get started. The easiest trades you'll ever find are called low resistant liquidity runs, or for short, LRLR. So what I'm looking for is a run to opposing liquidity after previous liquidity has been taken out and price has shown a willingness to trade in the opposite direction. Let's take a look at some charts. So for an easy example, we're going to take a look at SPY on a 1 hour chart, 1 hour time frame. And what we have is equal lows, actually low resistant lows at 452.65. So that is a downside objective that, well, we've had those marked up. July 1st is when they formed, and on the way higher, we did keep in mind that these were down here. Now, price at all-time highs hasn't really ran liquidity like a previous high from a long time ago. This is just all-time highs. Now, in the short term, sure. Okay, so this was a Wednesday in here at our current all-time highs. Tuesday, July 16th, excuse me. And so that Tuesday ran Monday's high. So that is manipulation. We see a drop down on Wednesday, and we actually see a continuation all the way until Friday, July 19th. So price in this leg lower has shown a willingness to trade below these lows. How can we quantify that, or how can we, measure that? Well, if we measure from the lows here, the low resistant lows, up to the high, which is all-time highs, what I'm paying attention to is the 50% level. So that 50% level is 553.80. And the way I usually mark it up is with the black dashed line, just like that. Now, you can also use a GAN box if you want. The GAN box will also draw. All right, so all you have to do is take your GAN box, draw it out like that, and that will also get you 50%, however you want to do it. But either way, the important thing here is that price crosses 50% on the way down, heading towards liquidity down here. We trade higher and back above 50%. This would put us in a premium market when it comes to buy low, sell high, right? Everybody does that or wants to do that. How do you know what's high or low? We can quantify that by using 50%. So 50% up to all-time highs. Everything here can be considered a premium market, which is ideal for shorts. So today, right, Wednesday, the 24th of July, we gapped lower and price has been trading lower all day. Right. So some people have been trying to long this market, and on today's live session, right, I pointed out that low again, 542.44. We haven't gotten there yet, but I'm pretty sure we're going to do that here in the next few minutes. It's not why I made the YouTube video, but somebody did ask me today on the live session, what I would do if I had to start over as a trader, from the beginning without knowing what I know today after trading for 10 years, 10 and a half years. Well, I told them I would look for this. I would look for low resistant liquidity runs, right? A willingness to trade lower, for example, a retracement, and that's what I want to be shorting into to go lower. So yesterday I did take a day trade on ES to go lower, but I didn't hold for today. And that's okay. But if you're a swing trader and you can hold, let's say, multiple days, you would have been able to catch this move to go down here. So this leg lower has offered no real resistance, right? It's not really trading higher to almost any degree. It trades up a little bit and immediately gets pushed back lower. And this is live price, folks. This is live price as I'm recording this video. There is your run below the lows. 542.44. We're in the 542.20s or 30s. And that's what that looks like. So this is the kind of easy trading that you'll see. Low resistant liquidity runs. But let's take it further. Let's go into yesterday's price action on a 5-minute time frame. Because price is fractal, so what you're going to see on small time frames, you're going to see on medium and large time frames. Okay, so that same idea can actually be seen here. So if we mark these lows together, right, from 8:30 a.m. and 11:55 a.m., those are low resistant lows. Now on ES, those are actually equal. So if we go over to ES yesterday, okay, this is what that looks like. Those lows right there are equal, right there and right there. That's a nice target. That's what I also gave on a live session yesterday. And you'll notice that we have an imbalance that was created on the way lower. So same thing. We can measure our low up to our high, and there's our 50% right here. So we cross 50% violently. We trade back above it into this imbalance. That's something that we could look for shorts on, or a little bit afterwards for that low resistant run on liquidity, because previous liquidity had been taken, right? So this morning session, or part of the morning session, had a high, and that was ran in the later part of the AM session. So liquidity has been taken here. We have opposing liquidity down here, and that is what the market attacked. So we want to be shorting, okay, on the way up in an environment where the market wants to trade lower. Okay. And so this is what that looks like today. The markets are stupid bloody today, right? Because of that low resistance liquidity run. If we look at ES on a 1 hour, we don't really have the same lows as SPY does, but it does have July 2nd, 55.02, close to that. And you can see that we easily gave that, or price was able to meet that. All right. So again, these are the easiest trades you'll ever take. If you find it and get it correct, of course. Low resistant liquidity runs. I wait for liquidity to be swept. I wait for a willingness to trade in the opposite direction. And then I want to short on the way up, or I want to long on the way down. Now, the most immediate example I can think of is British pound. So one of my students in the Discord, actually in our Discord community, posted that they traded British pound today. And I looked at it, and this, sure enough, was a low resistant run on liquidity. All right, same thing. We have equal highs up here. We have a run on liquidity down here, right? So this is Wednesday during London. It makes 3 lower lows. It also runs Tuesday's low here. We trade higher. There's an imbalance here. We cross, what do we cross? 50% right here. Back into an imbalance. And this right in here to go higher, right? That to me is the buying opportunity. Below 50% is considered discount. Imbalance that was created towards opposing liquidity. Okay. So if you don't know by now, all right, the market trades from liquidity to liquidity, and the opportunities are going to be found in between. Imbalances, 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 imbalances on the way up. All right. And that's it. So hopefully you were able to learn something from this video. If you did, drop a like on it. I would greatly appreciate that. Leave me a comment. Let me know what you think. And if you really got value, send this to a friend so they can get some value as well. Thank you guys so much. And I'll see you in the next one.